Hello, welcome to the look ahead for Monday, the 20th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. There are no major earnings that we're expecting to see released on Monday. However, there are a couple of items on the economic calendar that are worth watching. So, first up, German PPI for October. Now, this is expected to decline month on month in October by 0.1%, and that's after it declined by 0.2% in September. It's also expected to fall on an annual basis by 11%. These are quite steep declines that we're seeing in PPI, which bodes well for, well, firstly, it shows that Germany is in a weak demand environment. It also suggests that we could see CPI continuing to fall. Let's not forget that we had German CPI data just the other week, and that showed us that it had cooled to a 2-year low. We had Eurozone final CPI data came out today. That also showed that Eurozone inflation had cooled to a 2-year low of 2.9%. So I think overall we're seeing, data showing that perhaps the ECB has reached the end of its rate hiking cycle. Now, what does that mean for the stock markets? We've seen, obviously, the DAX has had a stellar week. In fact, it's not just the DAX. We saw stocks across the US and also across Europe have had a really strong week on this expectation that central banks have reached peak interest rates, and the attention is starting to turn to when will central banks start cutting interest rates. Obviously, that's still some time away, but expectations are around June next year. Now, the DAX has rallied hard. It's risen across the 200 SMA, and it's heading towards that 16,000 level, just within a breath of it as we speak. Now, as far as the RSI is concerned, just worth keeping an eye on that because that has moved into overbought territory. So buyers should be cautious. If we did see a move towards that 16,000, then above there would be looking at 16,430 as a target. That was the June high. On the downside, support on the 200 SMA, which is around the 15,660 level, with a breakdown there leading us potentially to 15,500. Sorry, on the 200 SMA, that was at 15,660. So just also going back to what else we will be watching on Monday. Got Bank of England Governor Andrew Bailey is due to speak. His comments will be in focus after we've had a very busy week for UK economic data this week. We've seen jobs data come through, which showed that, whilst wage growth remains sticky at 7.9%, just down slightly from the 8.2%, we did see that the number of vacancies has fallen by 43,000 in Q3, suggesting some weakness is coming through in the labour market. Then we also saw UK inflation fall by more than expected to 4.6% year on year, down significantly from 6.7%. And then we also saw today that UK retail sales were unexpectedly fell by 0.3%. And that's after a down revision of 1.1%. They declined in September. So clearly, the consumer is coming under pressure as interest rates remain high and inflation cooling, but still high. So I think what we're looking at here, though, is expectations that the Bank of England is not going to be hiking interest rates again. In fact, the market is now pricing in an interest rate cut from the Bank of England by June next year. And there's a 60% probability that they could, in fact, cut in May. So what we've been watching here is obviously the pound US dollar. This has been an interesting one because the US dollar has had a big move downwards this week as well after that inflation data came through cooler than expected. Again, jobless claims were also cooler than expected, and US retail sales fell for the first time in 7 months. So the data is, as well in the US, is starting to show that there's some weakness coming through. Now, the pound US dollar cable, it failed to rise above or hold above the 200 SMI. It briefly pushed above to a high of 125 this week, but it didn't manage to remain above that 200 SMA, which is going to be a key level. That's at 124.40. We really do need to see a rise above that level, a close above that level, in order for the bulls to regain momentum and push above 125, the November high, to head towards that 126 level. As far as support is concerned, we've got the 123.40, which is the October high on the downside to watch out for. Finally, I think the other thing just to mention, we can't really, I mean, it's not got a particular data point to look out for on Monday, but oil is something which has been very much in focus this week. It's fallen really quite considerably. It's down around 15% in the past 4 weeks and around 20% in the past 6 weeks. So I think it is worth just keeping this on your radar. What's been causing that sell-off is signs of ample supply, so record non-OPEC production, and that's been combined with signs of weakness in the demand outlook, particularly surrounding China. There are some signs that we've seen the refinery throughput has fallen slightly, or at least eased recently, raising some concerns. So just having a look at this oil chart, we can see again that oil has fallen through that 200 SMA, so it's favoring the downside there. I mean, the technical outlook is negative. We could see a retrace higher if we get some positive news regarding supply or demand, but otherwise, I think sellers in oil will be looking to break below the 1740 level, 72.40, which was reached yesterday. That was a 4-month low. A break below there brings 70, the round number, into focus. And then watch out for that triple bottom around the $67 the barrel level. Any recovery is going to need to rise above that 200 SMA, which is around that 78 level, which, to be honest, looks like quite a challenging move right now. I hope you've enjoyed what you've been watching. If you like what you've seen, then please press a like, and also do subscribe to receive more videos like this one. Thanks very much and have a great weekend.